Welcome to Matters Financial and Geopolitical from the Frontier. Good to be back. I was in London. I'll tell you about that in a moment. But let's first off start with sterling. This is a chart that Aurelia posted, and she's targeting 130. We're last at 128.22, and the shorts are getting burned badly. The pound rose above its 200-day moving average. I tend to agree with her. I've been bullish for a while about the pound, and politically speaking, I think Theresa May is going to wipe the floor of the opposition, going to increase the majority, and I think this is the point when sterling starts to turn around. And yesterday's move was pretty dramatic, you'll have to admit, and the shorts got burned. Home thoughts. Thoroughly enjoyed being in London, where of course I spent more than half my life, in fact, and it's such fun taking the girls around and showing them places that I used to hang out in, and them asking me about my time there, and it made me go back to Samuel Johnson, who said, "Sir, when a man is tired of London, he is tired of life, for there is in London all that life can afford." And I don't think he was wrong. It was really good to be back, I must say. We had a lovely time, even had a rather fancy meal in the Connaught, amongst other things, and it was great to catch up. Caught up with Christian Turner, who's now a big cheese in the National Security Department at Whitehall, but now I'm back here, and for that I'll put up this photograph from The Mentalist, a photograph of Nairobi. Right, let's move on. Political reflections. UK's Theresa May calls an early election, surprise early general election for June 8, aimed at strengthening a hand in her country's critical divorce negotiations with the European Union. Essentially, I think it's going to strengthen the hand. If she wins the election, the FT believes Theresa May could become the most powerful prime minister since the Second World War. They're not wrong. Well, Mrs. Thatcher, subsequently, I think it's difficult to discount her, isn't it? I think Theresa May is going to win by a distance, like Shergar did in the Epsom Derby. Let me put up a photograph of that wonderful Shergar winning the Derby by more than 10 lengths. Her party enjoys a 21 percentage point lead in the polls, and she's going to certainly cement that. I don't think Corbyn's in with any kind of chance here. Citibank calculus for moving timetable forward logical, provide opportunity for UK's May to strengthen size of slim majority, that is 330 out of 650, and I think she'll strengthen it considerably, we'll discover. My piece over the weekend was Geopolitics flexes its muscles. Geopolitics has always been a factor in the market's thinking, but last week it became the preeminent factor. First off, President Trump thrust the US into the Syrian maelstrom by lobbing 59 Tomahawks at an airfield in Syria. Next up, the US dropped a MOAB, which is a GBU-43B massive ordnance air blast, a large yield thermobaric bomb in Afghanistan. This was just an hors d'oeuvre, and we did learn that the Tomahawks were lobbed at Syria whilst President Trump and President Xi Jinping were enjoying some rather good chocolate cake at Mar-a-Lago. That detail, of course, President Trump chose to release to Mario Bartiromo. The pièce de résistance in a geopolitical context last week was the news that the US policy of strategic patience with North Korea was over. And an Armada, we're sending an Armada, very powerful. We have submarines, very powerful, far more powerful than the aircraft carrier. I wrote is now part of the Korean Peninsula, but we've discovered it isn't, and I will get to that in a moment. Machiavelli argued that sometimes it is a very wise thing to simulate madness in his discourses on Livy. The madman theory was a feature of Richard Nixon's foreign policy. Other than both having tiny little hands and both possessing nuclear weapons, we're dealing with two principles whose very raison d'etre appears to be escalation. If the US provokes recklessly, the revolutionary forces will take an annihilating strike. This is Cho Rong-hae, a senior regime official. North Korea is ready for a nuclear full-scale war if the US wants it, he added. Saddam Hussein, who was prone to a similar type of hyperbole, did not possess a nuclear weapon. This is the key point. This is the difference. Furthermore, it is impossible to model how little Kim is going to react to what he must perceive as an existential threat to him and his regime. And of course, millions of people sit in Seoul, which is a short distance away. And I think we're in a very, very fragile and volatile moment here. Of course, I've not even mentioned the French election, which of course is another big geopolitical curveball itself. The purest geopolitical proxy in the markets is gold. As Ben Bernanke once said, people hold gold as protection against what we call tail risks, really, really bad outcomes. Gold closed the week at a 6-month high of 1285. We're just below that right now, and has the potential, in my view, to go nuclear. Silver, which behaves like gold on steroids, closed at a 1-year high. The Trump reflation trade is being unwound. Trump reflation trade was based on the theory that US interest rates were going higher. We saw a near enough 40 basis point rally in US 10-year yields last week. The open question is, how does this affect emerging markets, which had been in a sweet spot in 2017, with some exceptions, mostly politically correlated? South Africa and Turkey, of course, come to mind. The Armada Trump claimed was deployed to North Korea was actually heading for Australia. That's a point worth noting. Global government bond yields keep falling. US 10-year yields dropped to lowest since November, as markets showing a step up in nervousness about geopolitical risks. I like this demographic crisis alert. Japan is set to lose nearly 1/3 of its population in 50 years. The ex-boss of Kingfisher Airlines and Indian tycoon Vijay Mallya faces extradition after being arrested in London. And this is what happens when your head is stuck so far up your derriere, as his was. The Erdogan effect. Turkey package holiday prices keep falling following the referendum. 1 week all-inclusive now for €399. And tourism is being affected quite sharply by some of these political moves. Trump is another example. China's Li says EU and China must promote free trade. It's interesting how China's become the free trade champion of late. International markets, world growth is expected to rise from 3.1% in 2016 to 3.5% in 2017 and 3.6% in 2018. That's the IMF. Let's move on to the currency markets. The euro is at 107.28 now, taking a little bit of a bounce. Dollar index, look at this key level, as I've been speaking about before, 99.50. We look as if we're about to break down through that level. Japanese yen, 108.83. The pound, let's take a look what that is, 128.27. I tend to agree with Aurelia. The shorts are huge. They're going to get squeezed. We're going up to 130. The Australian dollar's been very soft of late, 0.7514 now, my goodness. India rupee, 64.565. That's been a good performer this year. South Korean won 11.42, but obviously if something breaks on the peninsula, you're going to see a big move there. Brazilian real, overlooking corruption charges, 310.81 last. Egyptian pound, 18.1515. and the rand last at 13.31.52. I'm bearish the rand. Sell it now because you've had this big counter trend rally. It's not going to last, and I foresee a sharp move lower in the rand again. Dollar index, I'm putting up a 6-month chart. I've spoken about 99.50 being key. I think we're around the 99.60 level. We break down, we're going to see a big move lower in the dollar. Dollar yen, that's moving higher, 108.81. Key level is 108.90. For now, we popped up back above that, but I think that was moved by the BOJ during thin trading on Monday, Easter Monday. But keep an eye on that. I'm looking for a move back to 100. Commodity markets, gold, as we spoke before, 1284.26. You can't really short it because we're in the period of maximum geopolitical uncertainty right now. I think it could go to 13.50 is the way I look at it now. Crude oil, $52.83. Key level that it got rejected at was $54. Keep an eye on that. Frontier markets, no more new frontiers, creates index problem for hottest stocks. Alexander the Great is said to have wept when he saw there were no more lands to conquer. For investors in a shrinking pool of frontier markets, places like Morocco and Vietnam, the feeling might be familiar. As many of these nations graduate to emerging market status, the closely watched index of frontier equities is in danger of losing some of its largest and most liquid members, including Pakistan, Argentina, and Nigeria. With few obvious candidates to replace them, analysts at Citigroup have been sounding the alarm on what they've dubbed the index problem besetting a genre whose returns beat more developed peers over the past 5 years. You have to ask what's left in the frontier index. If Pakistan and Argentina leave the index, it won't be a very attractive composition anymore. I think more and more funds will choose not to track the index. Index provider MSCI is slated to recategorize Pakistan next month, taking one of the larger and more liquid frontier markets out of the benchmark and pushing it into its emerging market equivalent. Argentina and Nigeria are also being considered for reclassification. Pakistan made up 10% of the overall index, while Argentina claimed 15%, Nigeria 7% at the end of last year. Disappearance of markets that have become bread and butter to investors who follow frontier designated mandates is a recurring problem. A decade ago, the UAE and Qatar accounted for 28% of the frontier index. They were then shifted into the emerging market bucket in 2013, delivering a hit to the frontier markets index size from which it has never recovered. Interesting. Let's move on to Africa. The IMF is predicting sub-Saharan African GDP, which grew at 1.4% in 2016, will expand 2.6% this year and 3.5% in 2018. And interestingly, have a look at this forecast to get the country by country detail. That's still with a very weak South Africa and Nigeria, which make up half of the SSA GDP. And I wrote a piece a week ago which was about, will economics prevail against politics in Africa? This is the key point, as we're all discovering now. The political risks can far outweigh the economic story. South Africa is a case in point. Swamp dwellers farm by night as South Sudan ravaged by famine. What a disaster. By day, Mary Nyariak scours swamps for fish and edible water lilies. When darkness falls and South Sudan's militias retreat to their bases, she and hundreds of others, fleeing a 3-year civil war, slip onto dry land and tend crops to stave off famine. Prowling hyenas pose a threat during Nyarak's nighttime harvest, but they worry her less than the armed men who can appear in daytime. The 20-year-old said as she sat beneath neem trees in the northern county of Lear, one of 2 areas in South Sudan where the United Nations in February made the world's first declaration of famine since 2011. I'm surprised you came, President Kiir told Priti Patel, before she declared genocide. The media says there's bodies at the airport. He has been a debacle of a leader, and he should be removed. Zimbabwe's cash cows are a signal of desperation. This is in the FT. They don't call it a cash cow for nothing. In Zimbabwe, new legislation would make it easier for small and medium-scale farmers to use movable assets, such as cows, goats, and sheep, as well as farm machinery, vehicles, and accounts receivable as collateral for loans. Under the law introduced by President Robert Mugabe's ruling ZANU-PF party, financial institutions would be obliged to accept such items as security for credit. There is nothing wrong with the idea per se, as in other parts of Africa, including Ghana, Kenya, Nigeria, livestock is frequently used as collateral. Yet, this is the last thing Mugabe appears ready to accept. It seems he would prefer to take Zimbabwe's economy down rather than relinquish power. In the meantime, like the story of Jack and the Beanstalk, his government can only resort to a clever bovine exchange. For anyone who believes this will be enough to save the economy, Robert Mugabe has some magic beans to sell you. I wrote about this in July 2016 when I quoted Hunter S. Thompson, and I said countries like Zimbabwe feel like they are right at the edge. An edge that Hunter S. Thompson described thus: the edge, there is no honest way to explain it, because the only people who really know where it is are the ones who have gone over. Zambia seeks IMF deal of as much as $1.6 billion this month. Zambia is Africa's second largest copper producer, plans to reach an aid deal for as much as $1.6 billion with the IMF by the end of April. Finance Minister Felix Mutati said bond yields fell. It's quite an interesting scenario there, of course, with the opposition leader in prison for not giving way to the president's motorcade. South African oil shares stumbled big time yesterday, down 1.57%. It's up 3.99% year to date. Dollar rand, we've had a very strong counter trend rally here, and last time I looked we're at 1334. I'm going limit short with a 12.75 stop. Nigerian oil share down 6.16% this year. Ghana Stock Exchange Composite Index up 11.34% this year. EcoBank fell 5% on Tuesday after the Pan-African lender reported a loss for 2016. Blaming a recession in Nigeria, where it has a big business in its main market and a strong US dollar. The bank also proposed raising $400 million via convertible bond issue from shareholders at 6.46% above LIBOR. It said it received subscriptions from existing shareholders for around $300 million. That's really high. Doesn't bode well, does it? Take a look at this photograph on the star of the opposition. They need to choose a candidate. They've been dilly-dallying, and frankly, I think it's a Humpty Dumpty situation that they're not going to be able to put it together once they choose a candidate. And therefore, it's going to be a bit of a walkover here for President Kenyatta. Kenya shilling lost at 103.14. Nairobi all share stumbled yesterday, down 1.17%, but it's still marginally up for the year, up 0.12%. NSE 20 is down 2.65%. You remember when it was down big time and I said to everybody, buy it, and everybody thought I was mad. If you want to check into any listed share, there's a link at the bottom of Rich Wrap-Ups. EGADS is outsourcing the management of its farms to a company that's associated with Dormants. If you want to look at the share price data, the link is there as well. Once again, good to be back. I hope you didn't enjoy my absence too much, but thanks a lot for listening. I do appreciate it.